We must transform NATO for the next generation. That was NATO Parliamentary Assembly President Michel Djebba speaking recently. NATO, the North Atlantic Treaty Organization, is 75 years old on the 4th of April this year. And for many, it's more relevant today than it was when it was first set up. So what's the relevance of this for us investors? Well, there's a fund with the ticker symbol NATO run by HANetf, which majors on companies associated with defence. The firm's head of ETF research is Tom Bailey, and he joins us now with more. Tom, welcome.
Thank you.
We've spoken to you about this fund before, and in fact, subsequent to that, I have become an investor. But it's clear that defence companies are, everybody's talking about them because of opportunities, because of the world as it is at the moment. But first, NATO, 75 years old. I mean, that's a venerable organisation, and 75 is a good anniversary, I think, to celebrate. But it has changed over the years, hasn't it?
Yeah, it's changed and it hasn't. I think in terms of, I mean, the first kind of point out is it's one of the oldest running multinational military alliances in history, all the way through history. And the fact that it survived this long is quite an achievement. And it's still a very powerful alliance if you consider just in terms of the manpower of nations included. It accounts for something between half and 2/3 of global military spending, includes 3 different members of the Security Council and the UN, and also 3 nuclear powers, that being Britain, UK, and UK, France, and the USA. So it's still a very powerful alliance. Its mission, I think, is still the same, but it has new challenges, is I think the key point. So, you know, set up 75 years ago as a defensive alliance to defend Europe against then Soviet Union aggression, and it was often kind of said at the time it was to keep the Germans down, the Russians out, and the Americans in. and it's still not keeping the Germans down so much, and actually there's much more pressure on Germany to start spending. Yeah. And that's maybe potentially one of these changes we're seeing, is that now NATO, as it kind of has its 75th anniversary, there's big questions about the members that are not the US, is commitment to actually spending enough. So the US's commitment is questioned in another sense, in terms of, you know, its actually desire under, say, potentially Trump administration to remain part of the alliance. But Europe is being criticised a lot. European members of NATO are being criticised a lot for not spending nearly enough on their defence, becoming basically dependent on American defence. So they have this rule in NATO, a target of spending 2% of your GDP on defence. A lot of European NATO members do not meet this 2% target, including Germany, France, Italy. The UK does. You also see countries like Poland, for whom the latest outbreak of conflict 2 years ago is a much more of an existential question, spending large amounts, up to about 4% right now. But I think this at NATO at 75 is this kind of, what is it going to become in terms of, can it be this actually multinational alliance of members across Europe playing their role within this and spending enough on defence, rather than kind of, as it has been the case for the last couple of decades, relying on the US for defence.
Of course, things have changed over the last 18, 24 months or so, of course, with Russia, Ukraine. And I think it was it last year before Emmanuel Macron, we were talking about this, about his commentary, NATO, and in fact it wasn't relevant now, but that does seem to have changed.
Yeah, so Macron said before, I think 2019, that NATO was brain dead as an organisation, and it kind of, maybe the sense of it kind of drifted in terms of what its purpose was in this world. But since the invasion of Ukraine by Russia, its purpose has become renewed and clear, and that's defending as a defensive alliance to protect against aggression of those member states. And so that includes those states such as Lithuania, Latvia and Estonia, who are incredibly vulnerable right now, as well as Poland, and at the same time welcoming new members, because we shouldn't forget that NATO has expanded by 2 different members, Finland and Sweden, who themselves, after the invasion of Ukraine by Russia, have felt vulnerable themselves given their geographical proximity to Russia, and decided to join, something they didn't do during the Cold War. Finland couldn't for various different reasons, but Sweden had always tried to keep this neutral stance. But this new geopolitical situation, it was decided in Sweden that joining NATO was a requirement for their national security. Yeah.
Let's bring up a price chart for the UCITS ETF. I mean, it's pretty much all one direction. This chart goes back to mid-2023, but the point is, it is with far more emphasis now, I guess, on defence companies. But defence is a very interesting area because there's industrials, there's technology, there's all sorts of different sorts of angles here. Explain more about the spread, the big members, and what is it about the fund that is so dynamic?
Sure. So when we set this ETF up, one of the key kind of aspects we wanted to consider was not just making it an industrial defence ETF. I mean, that's a core part of defence, but we wanted to, as the name alludes to, future of defence. We wanted it to be about the kind of future of defence spending and where that money is going to go. So we didn't set strict parameters on what the split would be between, say, industrials and what we view as a growing area of cyber defence. But we have two different buckets of these stocks essentially through methodology. So we have the industrial firms, and these firms have to be producing, have to be generating over 50% of their revenue from the sale of defence armaments, and also be domiciled in a NATO or NATO Plus member. And then we have the cyber aspects, and these are cyber defense companies, cybersecurity companies, often software, who have contracts with NATO members to ensure some sort of cybersecurity, kind of as a recognition of the growing role of cyber in defense. So, you know, one recent example, Macron has been very vocal lately on the need of European members of NATO to stand very firm on the Ukraine question, and perhaps coincidentally, but maybe not, in March this year, France has suffered some very French government agencies have suffered very severe cyber attacks. Now, can't say definitively who that was, but this idea that actually cyber and cyber attacks are part of either when there's outright warfare between countries, or in what's called kind of grey zone warfare, where countries are hostile with each other and therefore are targeted on that basis. So that's why we have this split between industrials and cyber, and the performance, you know, between the two is often not correlated, so it adds this nice diversification element. So industrials are typically much more value stocks and then cyclical, while the cyber stocks are often growth stocks. So
it's interesting actually looking at the split at the moment. The last reading we've got on this, and I'm reading here from the latest documentation, industrials 57%, technology 42%. We know that technology has risen an awful lot, and in fact I think one of the biggest holdings in the top five is Palantir, which is up 260% over the last year or so. Has technology come along in terms of weighting in the overall spread in the last couple of years or so, or is it just?
The range of the two hasn't changed that much from the inception when we first launched it in July, and that's really testament to the strength of both sides of both sectors, because, you know, the tech stocks in general have done very well over that period of time in terms of better outlook on monetary policy, but some of these industrial defence stocks have done incredibly well too, such as Rheinmetall, BAE Systems, who have seen these big order increases since the these new spending packages from European NATO members. So Rheinmetall has seen its order book up 44% last year compared to the year before. So it's not actually become unbalanced in terms of what the original set was. So it's working quite well, we think.
And here in the UK, biggest company that contributes to the fund?
BAE Systems would be by far, I think, the biggest in terms of industrials. And then UK, we also have Darktrace in there, tech stock. So obviously they have contracts with parts of the UK government in terms of that cybersecurity element. Because, you know, you can think about cybersecurity just to say, you know, keeping the computers for MI6 safe. But it's not just that, because any sort of hostile state-sponsored cyber attack is not just going to attack aspects of that, they're also going to attack critical infrastructure, which would include stuff like national grids or healthcare.
Have there been, since you set this up last year, has there been much movement in terms of the membership, the list of stocks that you've got, or are you just acquiring more for the fund to get a wider spread?
Well, no, the index methodology, we think one of the ones that was added post-launch was Palantir, and we rebalance quarterly. So any new stock which has met those requirements for the index methodology will be added. So, you know, there's new companies that will be added out there if either their revenue composition has changed or they've IPO'd, because there's been some interesting IPOs of defence companies, one in Germany, Renk. Obviously, we can't say before rebalance what we think is going to be added, because it's just a rules-based methodology, but there does seem to be some interesting companies in the pipeline of what could potentially be added to an index such as ours. And so, you know, we're not just acquiring new stocks. It's obviously looking also at what those stocks have kind of their market caps, and if they've fallen below a threshold or their revenues have been more geared towards another area, then they might be removed, because we're trying to make sure it remains pure play and has that defence focus.
Yeah. Just one final question about ETFs generally. At HANetf, obviously it's your specialism. This is listed on the IG platform. Of course, anybody wants exposure to this. Just outline what an ETF does and what it provides an investor.
Sure. So essentially, an ETF is a collective investment vehicle. So the same way you'd have with an investment trust or a mutual fund. So you can buy one unit in it, in an ETF's case, one share, for exposure to that basket of companies which it provides exposure to. And the key difference with an ETF versus, say, a traditional investment fund is that, as I said, they're shares and they're listed on a stock exchange. So they get that intraday liquidity. They can trade throughout the day. So you don't have to wait to the end of the day to sell out of the fund or to buy the fund. It's a live pricing in real time.
It's a pleasure, Tom. Thanks indeed for joining us with this look at NATO, the Future of Defence ETF, which you can, as I say, find on the IG platform. That's Tom Bailey. He's Head of ETF Research at HANetf.